Welcome back, but passive income investors alike, to my $253,000 dividend stock portfolio breakdown with the stocks I bought, the stocks I sold, and trust me, I've done a lot of that this week. But before I reveal any of that to you, a lot of you seem to be graphic design artists or home design artists, and you hate my backdrop because these are my soundproofing little foam bricks that make the audio not soundproofing but sound dampening, makes the mic quality sound a little better. If you don't like this backdrop, hit the dislike button. If you don't mind it, hit the like button. If a lot of you dislike, I'll change it. But nonetheless, let's kick this off, zooming out, taking a look at the broader overview this week, guys, because we got a lot to get into here. So kicking it off with my growth stocks, QQQM, Apple, Microsoft, Facebook. I did, however, sell Alibaba, and I'm going to explain more about that in a second, but the entire portfolio today is starting to creep back toward all-time highs, sitting at $253,596. This is excluding some of the tax capital that I currently owe the government, because if I could put that in there, I'd be well over all-time highs right now. But, you know, capital gains, taxes, blah, blah, blah. But what did I end up doing here, folks? Well, taking a look at the lower half, moving away from growth, and why I sold BABA was because it sits in my registered retirement savings plan, where I kind of keep my consumer staple brand companies when we're talking about J&J, Pepsi, Kimberly-Clark, and then I sold BABA to buy Lockheed Martin. Now, you OGs out there over the last few weeks are well aware that I have been doing a lot of adjusting as I try and open up a corporation. And basically, I want to buy BABA back, but I'm going to buy it in a corporate account because I get tax benefits in my RR to the S to the P, my registered retirement savings plan. And unfortunately, all of these companies don't pay a huge dividend yield. It's like 3%, right? And I, as a Canadian owning these US stocks, pay over the border withholding tax, 15%. But the Canadian government's like, hey, if you put money in your retirement account, we won't take that 15% away from you. So that's why it makes sense for me to be holding these US kind of low dividend paying stocks in this registered retirement account. Now, moving down the list, just to continue on here, folks, I added one new position and I sold some aggressive growth to get this position. A lot of you are going to hate me for this. I kind of sold MyMed, folks. I'm going to get back to that in a second as well. But I used all that money to buy TELUS Communications. And this is the first telecom stock I ever bought, and I put a little bit of money in it a few days ago to realize that I actually really like the company over Bell or Rogers. It is an extremely well-diversified telecom company. They do in-home security. They just got into telehealth medicine, so this is technically becoming almost a medical company. And then on top of that, you got wireless network, 5G coming out. You already got cell phone service, and it's a $30 billion conglomerate paying a 4.78% yield. I did a bit of a breakdown the other day. I suggest you go check that video out, guys, but I loaded the bloody boat on this sucker, and the more I look into it, the better I feel about it. So yeah, I ended up selling all of my MyMed off. I put the rest of what I had left into TELUS Communications. Not, if you type in T stock, you're going to get AT&T, so make sure you put T.TO, because I think this is a better company than AT&T, in my humble Canadian opinion here, folks. But moving on, just taking a look before I touch base on why I sold MyMed. My Canadian banks have been, oh my God, guys, like, they haven't done anything for me for the last 4 years I've owned them, and then as of recently, to the moon. I mean, take a look at Bank of Nova Scotia, Canadian Imperial Bank. My positions used to be around $10,000, $11,000, $12,000 at the most, and now they're getting up toward $13,000, $15,000 on the high end. TD was one that I only recently started buying as of 2020, doing really well with that. Stag, God, I wish I bought a little more of this. Stag and my REITs right now, everything that is like been underrated boomer stock is coming back with a vengeance. And I actually kind of consider Stag and RioCan growth stocks. Now, in the pandemic, I mean, RioCan got hit, but I still think the future potential for what I paid at around $17 a share flat, even for RioCan, lots of future potential, especially with Stag, guys. Logistics company is slowly petering up from my buy price, which is wonderful. Northland Power, my favorite monthly paying dividend stock of all time. It's been flatlining lately. Not a lot going on. Still highly bullish. Southern Company, MO, forget my utilities. Get past utilities. They're boring. Own them, set them, forget them. More interestingly than not, my consumer discretion here when we're talking about Altria, British American Tobacco, these sin stocks. Guys, I hope you've been picking them up. I mean, they've been trading at a discount forever, and now finally they're pushing back into highs we haven't seen in quite some time here, folks. And then finally, on the speculative side of the nature in this portfolio, we're talking about Momentus being SRAC is the ticker for my space company, my pure play space. God, I got the crap kicked out of me on this, guys. I took some MyMed profit, diversified it, bought 10,000 of this to watch it drop almost in half. I'm down 40%. That hurts on the total position, I know. And I'm kind of in this shock and awe stuck phase where I want to sell it to buy it back in a corporation. And this thing is so bloody volatile, I'm just scared to touch it because I want to be in it until after the merger happens just to see how it ends up playing out, being one of the few pure play space stocks. But at the same time, I'm just like, I could sell it for loss, you know, write that up, potentially buy it back. But then I'm putting myself in this volatility risk of, does the stock go higher or lower? I don't know what happens in between my transfers. And oh my God, guys, it's just, God, that one was rough for me. Really, really rough. And then we got ARKG in here, which I'm not really going to do much with. But this bottom lower weighting all needs to get sold off. And we're talking about SRAC and ARKG. And basically my QQQ, actually. QQQ is going to move into the corporation as well. I'm really only shifting over about maybe 18,000, 20,000 at most. The rest of it is going to stay locked into my regular accounts. But as I've mentioned to you guys, in my regular accounts, I want to keep pure dividend stocks. I want to have pure cash flow that I can use to pay my bills in case of emergencies. I have to tap into it for whatever godly reason. I hit an all-time record high of $8,124 in annual dividends after the taxes, fees, whatever. And that's crazy to me. I've never hit that high. I think it equates to about $677 a month in passive income, which is just stellar. I mean, if you could see, guys, if I took all my growth, if I took all my aggressive growth, like I could easily kind of start pushing that up toward $10,000 in annual dividends. And this is kind of like the divide of balancing growth with dividends, because there's times where growth doesn't do well. And clearly in this moment, dividend stocks are making up for the lackluster performance and growth. Because again, guys, if you had all growth stocks, your portfolio is probably down 20, 30% right now. And when I talk about growth, I'm more or less focusing on speculative aggressive growth. Whereas if you primarily balanced between safe growth, tech plays, along with just your regular boring stocks, you're doing fairly decent here, right? So putting the dividends aside, my goal is to try and pack that up to about $10,000 in the next year or so. I told you guys I wanted to get closer to $1,000 a month, but that would require me to give up a lot more growth than I'm currently willing to. But nonetheless, where it currently stands, guys, I have been trying to scale my cash position. I've been very, very aggressive lately in moving things around. And unfortunately, my cash position after all the taxes I had to pay on capital gains, sitting around $1,135. It's not a good emergency fund, folks. So I'm going to be highly dedicated to rebuilding my cash position up. I'm also using Bitcoin as part of my emergency fund, which is a brand new thing I've started doing. I'm going to make whole videos on this, and I know a lot of you guys are highly against Bitcoin. And like I said, I don't hate it. I don't love it. But at this point, guys, I can't beat them, join them. So I'm starting to buy enough where it'll probably equate to about 1% of my entire portfolio. And like I said, I could tell you why Bitcoin's worthless, guys. I don't believe there's any underlying fundamentals to it except for blockchain, which doesn't require Bitcoin to operate. I don't know. It's a very intensive conversation that, heck, maybe we'll save for the live stream tonight. I'll be soloing it up, baby, on our live stream channel, The Passive Income Educator. Come over there, guys. We go live. I'll be going live at 10 p.m. tonight, and I think it would be a lot of fun if you guys come and join me and we can talk about Bitcoin and some of these highly speculative plays. But yes, I'm going to put about 2% of my net worth, or yeah, maybe 1 or 2% at most, into Bitcoin, being maybe around $3,000 to $5,000. The rest of it is going to be divvied up in my emergency fund between Canadian and USDs and high interest savings account, hopefully generating about 0.5%. Nothing crazy, but the idea, guys, is you always want to have that emergency fund for emergencies. And right now I'm not in a good spot. However, I did pay all my line of credit off. I got no more debt leveraged in the market whatsoever. And if the markets decide to tank miserably, that is primarily why I want to have my line of credit freed up, because I would love to take advantage of a super serious dip in really good stocks. So I passed the question off to you guys. What do you think? Let me know in that comment section below here. Do you think selling MyMed right now and trying to shift this stuff around is a good idea? It's kind of sketchy. It is costing me a lot. I do full breakdowns at the end of the month as well, updating you guys on my income, expenses, how much I made versus how much all of this is really going to cost me to move around, along with me incorporating my business. I'll touch base on more at the end of the month. So consider subscribing to stick around for that. But yeah, guys, it is been a pretty crazy aggressive week, and I'm really, really glad my dividends have hit record highs, because it wasn't even a month ago after Ryokan cut, after Geo cut. I mean, I dropped down to almost 7,000 in annual dividends, and then poof, a little readjustments, taking some capital gains, and we're back on top of the world. So stay cool, stay awesome, and I look forward to catching you tomorrow.